Hi everyone, and today in this video we will discuss about 3 companies which gave good results and are looking very good for the long term. And anything we discuss over here is not a buy or sell recommendation. So the first company we are going to discuss which has given very great results is Manorama Industries, and I have already made a video on this company, so anyone who is interested they can definitely check it out. So as we already know that Manorama is in the manufacturing of specialty fats and butters, and they also make cocoa butter equivalent. So by using multiple type of seeds which undergo through multiple process, so this is used in the final products like the chocolates and skincare products and etc. And along with that, they're also number 1 Indian exporter of the sal and mango based specialty fats and butters. And if you look at their geographical split, so currently domestic is only 27% and exports is 73%. But the best part is that only 2 to 3% consist of USA. And recently, as we already know, that because of tariff, our stock market was not doing that great, but because they have a small exposure in the USA, so it's a good sign for the company. Then afterwards, if you look at some big clients, so they have Ferrero Rocher, then in cosmetics they have L'Oreal, Activon and much more. So currently with a market cap of almost 8,600 crores, it's a small cap company. Then next, if you look at their median PE ratio, so over here we can see, so their 3-year median PE ratio is 64.1 and currently it's trading at 50 PE. So we can definitely say that currently it's undervalued and trading at a very good price. Then next, if you look at their latest quarterly results, so we can see from 290 crores of revenue, they have come up to 323 crores, and along with that, their EBITDA margins have also slightly increased from 26% to 27%. Then if you look at their net profit, which was 47 crores last quarter, now it's currently 53 crores, and their EPS also went up from 7.8 to 8.92. Next, if you look at their yearly financial numbers, so from 771 crores, now currently they have given a revenue of almost 1055 crores. So after their latest result during the con call, the management mentioned that as they have given a very good result, so they have increased their yearly revenue guidance. So that is a very good sign. Then afterwards, if you look at their balance sheet, so currently they have reserves of 448 crores and they have borrowings of 482 crores, and within that most of the borrowings are short-term borrowings which are 438 crores. And one of the main reason why the short-term borrowings is very high is because they need a lot of money for their working capital. Then afterwards, if you look at their current shareholding pattern, so promoters are holding almost the same percentage of 54%. Then FIs have slightly reduced their holdings from 3.4% to 2.5%. Then if you look at DIS, so it's almost the same of 4.61% and now currently it's 4.45%. And over here we can see there are some different type of funds who have invested in Manorama. Now let's take a look at the technicals of Manorama Industries. So since April 2024, they have given a very good bull run and trading in upward momentum, and now currently for the last few months it has been consolidating in a range. But after their quarterly results and the guidance which company has given, I think the company is going to do very good in the coming future. And during May 25, it was almost trading at the same price, but during that time it had a PE of 80 and now currently it's 50. So we can definitely say that there has been good PE re-rating in the last 2 quarters. And now let's come to the next company, which is Acuitas Chemical, which is also known as Ami Organics. So Ami Organics, as we already know that it is in the pharma industry, so they manufacture different type of APIs for new chemical entities. So new chemical entities can also be said like a new drug. So currently it's trading at a market cap of almost 14,000 crores with a PE of 61.6. If you look at their ROC and ROE, so their ROC is almost 20 and ROE is 16, and their PEG ratio is slightly higher and currently it's 2.04. Then afterwards, if you look at their PE ratio, so if we compare their PE ratio with the last 5-year median PE, so their 5-year median PE is 57 and their current PE is almost close to that. And if we compare that with the blue EPS bar, so the PE ratio is very undervalued. Then afterwards, if we compare Ami Organics with some other companies, so it is one of the smallest market cap company compared to these big companies. And if we compare their ROE and ROC with some other players, so it's almost similar to that. And next, if you look at their current quarterly results, so from 207 crores of revenue in last quarter, now they have given a revenue of 306 crores. But the main point over here is their margin expansion, which went up from 25% to 31%. So they have given their highest ever EBITDA margins. And lastly, if you look at their net profit, so it went up from 44 crores to 72 crores, and their EPS went up from 5.4 to to almost 8.9. So that's a very huge jump in their EBITDA margins and net profit. And even during their latest con call, the management has mentioned that they are expecting revenue growth guidance of 25 to 30%. And one of the main reason they saw a huge growth is because of the CDMO segment. Then next, if you look at their balance sheet, so currently they have a reserves of almost 1270 crores. And if you compare that with last year, so they had a reserves of 637 crores and they had a debt of 217 crores. But in 2025, they have significantly reduced their debt and now it's currently only 13 crores. Then afterwards, we can also see a jump in their fixed assets from 427 crores to 570 crores. So they have heavily increased their fixed assets in the plant machinery from 258 crores to 400 crores. Then after that, if you look at their cash flow statement, so they had a negative 1 crore cash flow last year, but now in 2025, it's positive 156 crores. So being a positive cash flow company is always a good sign. Then afterwards, if you look at their shareholding pattern, so within DIS, there are multiple mutual funds like the SBI Large and Mid Cap Fund, then Bank of India, then Union Small Cap Fund, UTI and ICICI Pru. And now let's take a look at the technicals. So during Jan 24, they were trading at almost 600 rupees and after that, the stock has been trading in a very good upward momentum and it has went up from 600 rupees to almost 1700 rupees. And even if you look at their PE ratio, which was 96 in the Jan 24, now currently it's trading at a PE of almost 61. So again, we can see over here that there has been a good PE re-rating because of good quarterly results. And the last company which has given very good results is Zomato. And as we already know that after the Blinkit, their business has been doing much better. And currently, the Blinkit is outperforming way better compared to its food delivery segment. And as we can see over here that they have a market cap of almost 3,15,000 crores. So that's a very big number. And if you look at their P ratio, which is way high of 1,680, and along with that, their ROCE and ROE is still less than 3%. But even after this high P, low ROCE and ROE, still big mutual funds and investors are buying this company. And one of the main reason why they're buying this company is because they're expecting huge revenue and huge profit in the coming future. So even after these bad financial ratios, if still big investors are buying this company, so definitely there is something going on. Then afterwards, if you compare Eternal with Swiggy, so Eternal is almost 3 times the size of Swiggy. And if you look at their ROE and ROC, at least it's positive compared to Swiggy. Then afterwards, if you look at their latest quarterly results, so in last quarter, they had a revenue of almost 7,200 crores, but now the revenue has went up to almost 14,000 crores. So that is almost 100% growth in their revenue. And if you look at their net profit, so that has went up from 25 crores to 65 crores. Even though their net current profit is still way lower compared to what it was in June 24 and September 24. But because the revenue has been significantly increasing, so that is one of the positive part. Then afterwards, if you look at their balance sheet, so currently they have a reserves of almost 30,000 crores and they have a debt of almost 3,300 crores. And even if you look at their fixed assets, which was almost 6,500 crores, now it's currently 11,000 crores. Then afterwards, if you look at their cash flow, so from 91 crores, now they have jumped up to 357 crores. So this is definitely a very good sign. Then afterwards, if you look at the ratio part, so from negative ROC, they had 1% of ROC in FY24 and now currently in FY25, it's 3%. So their financial ratios are also improving nicely. And next, if you look at their shareholding pattern and if you look at their DI holdings, so there are a lot of mutual funds like Motilal Oswal, Mirae Asset, Nippon, ICICI Pru, Axis, and now let's come to the technical part. So as we know that during March 2023, so it was trading at almost 50-60 rupees and after that they have given a very good upward momentum and from 50-60 rupees and now currently it's trading around 320-330 rupees. So thank you for watching this video. What do you guys think about the companies and their current quarter results? And if you want a detailed analysis of any company we discussed over here, write down in the comment section and see you in the next video.